Audit quality, KPMG versus Xerox.
Objective of an audit of financial statement is for the auditor to form an opinion on the financial statements based on having obtained sufficient appropriate audit evidence about whether the financial statements are free from materials misstatement and to report in accordance with the auditor's findings. For an external audit to fulfill its objective, the users of audited financial statements must have confidence that the auditor has worked to a suitable standard and that a quality audit has been performed. However, audit quality is best achieved in an environment where there is support from and appropriate interactions among participants in the financial reporting supply chain.
Audit quality is a complex subject and there is no analysis of it that has achieved universal recognition. Albeit the term audit quality is difficult to define, for the ICE encompasses a number of key elements that create an environment which maximizes the likelihood that quality audits are performed on a consistent basis. The key elements of audit quality is inputs, process, outputs, key interactions and contextual factors.
Inputs are grouped into the following input factors. 1. The values, ethics and attitudes of auditors. 2. The knowledge, skills and experience, also time allocated for them to perform the audit. It is applied directly at the audit engagement level, the level of an audit firm and the national level.
Quality audits involve auditors applying a rigorous audit process and quality control procedures that comply with laws, regulations and applicable standards.
Quality audit results in output that are useful and timely. The output from the audit determined by the context, including legislative requirements. While some stakeholders can influence the nature of the outputs, others have less influence. Some stakeholders, the auditor's report is the primary output.
Audit quality is best achieved in an environment where there is support from other participants. Shareholders interact can have a particular impact on audit quality. These interaction will be influenced by the context in which the audit is performed and allow a dynamic relationship to exist between inputs and outputs.
Detailed consideration will need to be given to matters such as the nature, timing and extent of the audit evidence obtained in response to the risks of material misstatement in a particular entity, the appropriateness of the relevant audit judgment made, and compliance with relevant standards.
Issue of audit quality. Even though Big Four firm that audited Xerox, yet there still scandal happened. Fraud occurred and KPMG failed to disclose. From 1997 through 2000, Xerox Corporation was engaged in a fraudulent scheme that misled investors about Xerox's earnings. In order to improve its reputation on Wall Street and to boost the company's stock price, it was alleged that the fraudulent conduct was responsible for accelerating the recognition of the equipment revenues of approximately $3 billion and increasing pre-tax earnings $1.4 billion in Xerox's financial statements. KPMG, who was Xerox's former independent auditor, was charged for its connection with the audits of Xerox Corporation. U.S. Securities and Exchange Commission found that KPMG permitted Xerox to manipulate its accounting policies. KPMG did not raise any concerns to Xerox's management about the illegal acts. Xerox ignored KPMG's request to perform further tests, and KPMG did not put any pressure to Xerox. This case clearly indicates poor audit quality. Provide detailed explanation of the issue's problems. First is cookie jar accounting. To bridge the gap between the investor's financial expectation and the actual achievable results, Xerox manipulated their financial statement by accounting for revenue in periods before the revenue occurred. By doing this, Xerox Corporation was in violation of the revenue recognition principle. Xerox was able to exploit investors and ensure that they perceived Xerox to be outperforming targets when in reality, the company was making a significant loss. Second is fraudulent earnings. The acceleration of revenue from short-term equipment rentals, which were improperly classified as long-term leases. The difference was significant because, according to the generally accepted accounting principles, GAAP, the standard by which a company's books are supposed to be measured, the entire value of a long-term lease can be included as revenue in the first year of the agreement. SEC findings. KPMG caused and willfully aided and abetted Xerox's violations of the anti-fraud reporting, record-keeping and internal controls provisions of the federal securities laws. The order also finds that KPMG violated its obligations to disclose to Xerox illegal acts that came to its attention during the Xerox audits. The order censures KPMG and orders it to cease and desist from committing or causing these violations. KPMG consented to the entry of the order without admitting or denying the SEC's findings. KPMG permitted Xerox to manipulate its accounting practices to close a $3 billion gap between actual operating results and results reported to the investing public. KPMG issued audit reports containing unqualified opinions stating that KPMG had applied generally accepted auditing standards (GAAS) to its review of Xerox's accounting, that Xerox's financial reporting was consistent with GAAP, and that Xerox's reported results fairly represented the financial condition of the company. However, the order finds that throughout this period KPMG failed to comply with GAAS and allowed Xerox to utilize accounting actions that did not comply with GAAP. KPMG allowed Xerox to manipulate its accounting practices to distort the company's financial results, failed to insist that Xerox disclose those practices and their financial impacts in the company's annual and quarterly reports, and allowed Xerox to falsify its books and records and to fail to maintain adequate internal controls over its accounting. The consequences: KPMG agreed to pay $22.5 million to settle SEC charge relates to its audits of Xerox. Xerox were eventually charged and forced to pay a fine in excess of $10 million by the SEC. The principal purpose of an audit is to enhance the degree of confidence felt by users of the company's financial statements. The users can include creditors, shareholders, other stakeholders, and newcomers who might be considering establishing a business relationship with the company. If your accounts are in good order, then a high-quality audit can be one of the best ways to demonstrate your true financial position, qualify for a major loan, or attract partners in other new ventures. Quality financial statement and compliance audits can help to Fulfill fiduciary responsibility. Obtain assurance related to the financial integrity of funded programs. Identify possible non-compliance and other issues here to avoid interruption of current funding. Lower the risk of future non-compliance. Build goodwill among taxpayers, donors and other key stakeholders, and strengthen the ability to secure additional funding in the future. Analyze the importance of the topic to the current development of audit profession. Auditors must obtain reasonable assurance that financial reports are free of material misstatement, apply sufficient skepticism to accounting estimates and treatments, and address any deficiencies detected. Improving audit quality and the consistency of audit execution is essential to maintaining confidence in the independent assurance they provide. Practice review in Malaysia is conducted by MIA through its Practice Review Department. It is part of MIA's commitment towards the protection of public interest through the assurance of audit quality. Auditor may think that once they submit their audit report, their responsibility is over. In this case, the fraud done by KPMG and permitted by Xerox to manipulate its accounting practices, but SEC managed to detect the fraud. KPMG may think that they are not responsible anymore because their duty towards their clients is already done. As an auditor, they need to carry out their audit work in accordance with international auditing standards, which auditors are required to exercise their skills with due care and diligence. Low audit quality work performed on engagements is one of the root causes of practice review failure. Poor audit quality work is associated with substandard work performed by auditors, resulting in non-compliance with auditing and accounting standards and legal requirements. Auditors nowadays are more careful and carry out their audit work and need to make sure that their audit is compliance with laws and regulations. Gain public trust on audit profession. Good audit quality will give positive effects on one work, therefore the demand of auditors will be increased as more people would want their companies to be audited.